Well, hello everybody. It is July 19th. This is the weekly review where we take a look at what happened last week and look at what we want to do in the coming weeks as a result of what happened. The main thing that happened was the NASDAQ, right? NASDAQ took off 4% plus 10% on the year. Elsewhere, it had good gains, nothing like the NASDAQ, but solid gains across the board. And that we can't go any farther to the downside really did kick in and push us higher on the upside. So solid gains again. This market still unwilling to do any kind of a major correction, just small little corrections, 5-6% at the most, and then off to the upside. And not just off to the upside, but like violently off to the upside, right? Is kind of what we've been seeing. As far as what's happening technically, fundamentally, after 2 weeks of that no more to the downside, we get the V-shaped reversal and spike to the top side. So if we take a look at how that played out on the charts, right, over the last couple of weeks, or actually the last month, you had this big spike down, right, V-shaped reversal back to the upside, and now top of the range, right? S&P top of the range, trying to break higher. You did get a doji on Friday. That's after a big move. That could be some sort of a little pullback that's getting ready to come. It was down most of the day. Got a little spike right at the end of the day to close positive. The real action, of course, has been not in the S&P, but over in the NASDAQ. So if I pull up the NASDAQ, the NASDAQ breaks out. You get over the tops, right? Changes the trend, gets over the top, and if you look at this on a weekly, not only did you get it on the daily, you got it on the weekly, got over that big volume top and actually traded higher. NDX, same thing, right? Gets over the top, so you get over here. That's on Thursday, follow through on Friday. That was off the Google earnings on Friday, and the earnings were Thursday night, but it was felt on Friday. And then you also got the spike over that big volume top here. So you finally got the clean breakouts on the NASDAQ and on the NDX. What we didn't see last week is we didn't see rotation into the small caps. And what I mean by that is you had this little area here, which is the breakdown bar, right? Couldn't get over it. And right in front of that breakdown bar was this high volume spike down, and so that spike down, got up there, consolidated, didn't give up anything as a result of the strength elsewhere, but also didn't get anything to the upside. So that's a laggard. That's something to watch. Small caps probably need to see rotation for this continuance of this move higher. So that's the S&P's top of the range. Asia, China. On the Shanghai market, we saw that government, the Chinese government, come out with all guns blazing, right, to stop this tremendous decline, 35%. Gets a little potential ABCD structure up here now. And what's going to be important is whether that actually completes or not off the swing point low. If it gets over the swing point low, then that changes everything again. Not so much everything, but that changes our view, or should change our view, to say, okay, this is probably a range. It's a sideways range, and it's a huge range, and it's a very playable range. And the ideal is that this range from here to there could, right, play out and eventually break to the top side. And if that's true, then again, here's another place one wants to try to invest and build a position over time. The key now, let it test into the swing point low, see if it goes sideways. If it does, then we potentially have something to trade going forward. Hong Kong, same thing, right? Comes down, comes off of that. Both of these, and I didn't show it on the Shanghai, but both of these held their bullish retest regions, which is a positive, right? They both came into it and somehow held it. What's the negative? Huge volume spike to the downside. More than likely, it's going to try to test that at some point. So if I think about that on a longer term perspective, right? So if I bring over, for example, the monthly chart, and I think about this on a longer term perspective, and I think about this being some sort of a range, now I can say to myself, oh, well, if that's the case, I definitely want to be looking at buying this range on the next spike lower. And if you look at it on this time frame, right, the spike up even we're only what, halfway through. The spike up volume is going to be about equal to the spike down volume. So you're going to have a high volume high and a high volume low, which is a good range trading perspective. From a range trade, that's a great setup actually, longer term. Europe came off the bottom, and if we look at those, I'm sure you're familiar with them. But Germany, here's the German, comes off the bottom, V-shaped reversal, gets over the highs, right, changes trend. This is a range trade still. I suspect what's going to happen is it's going to try to test up towards the highs of that range. I wouldn't be surprised to see it at least get up into here and stay in the range, but get up to there on the first try, get some sort of pullback, and then try to test the top of the range. So that's the DAX. The CAX looks pretty much the same. Going back to the notes here, earnings. Okay, so we had thought that earnings would probably be better than expected because we didn't have that drag on the dollar, which has really been the tail of the tape the last 2 quarters. If you combine that with the can kick in Greece, right, that is what led to this violent reversal and push higher. So the earnings bought aggressively. If they continue to be bought, that's going to be a big deal to set up the potential for a range break on the S&P 500. Technical positives, bullish retest regens on the NASDAQ. I've already shown that. The retest regens on the Russell. I didn't show that, so let's quickly pop back over there. Let me grab the indexes again. And what I'm talking about here is that weekly. We pointed it out last week, but we can look at it again. If I put it on the weekly, right, this swing point high actually held. And so if I look at this, right, that bullish retest as it comes back holds here, holds the week before, and then last week actually starts to regenerate higher. If this regenerates higher, what we should expect is some sort of a range break now to the top side. So in other words, we should see it get over this high and try to extend the range. So the Russells may be a good place to look at in this earnings season as a place to put some money. European markets, they actually tested into the 19th bar, and I didn't show that, so let me swing back over to those and show you that. The key here, and I'll just use the French index this time since we didn't look at it on the last one. If we look here, the key here was that these guys traded back into the big bar. This was the breakout bar. This is where you broke out, push higher, you come back into it, you'll have less volume. That leads to a nice reversal to the upside. So that was a big positive. The financials broke out. If I move over to the sectors, let me go grab those. On the sectors themselves, those financials broke higher. And it's not just the XLF, but I'll bring the XLF up as the example. Here's the swing point high. You get over the swing point high. You test back into it on Friday with no volume, right? Hold. That looks like a legitimate breakout there, and you can see it on multiple time frames. Now, you also have it happening in other sectors inside the financials as a group. For example, the broker-dealers. You have it here on the large cap money center banks. You don't have it on the KRE yet, which is the regionals, but they start putting their earnings out the next couple of weeks, over the next couple of weeks. So we may see it there. We also saw it in the insurance sector. So a broad strength breakout looks like it may be taking place here on the financials. So that's a big positive. And large cap technology broke higher. In particular, like Google, Facebook are breaking higher. Apple and Microsoft are this Tuesday. Will that extend this even farther like I just spoke about? I don't know, but that's really what's driving the NDX and the NASDAQ in general. What we didn't see was on the negative side was the follow through there on the Russell. We also didn't see any participation whatsoever in the SOX, and I think that's something really noteworthy because typically if you're going to get technology strength, you're going to have chip strength too. You don't have chip strength. Matter of fact, you have chip breakdown still continuing, and I'm talking about ABCD structures finishing one after another here on the downside on chips. And I wonder if we got another one trying to set up. That's going to be a big deal. Intel came out with earnings, didn't help that sector at all. And so chip stocks definitely lagging compared to everything else. And then if you look at the equal weighting, like the RYT as compared to the IYT, let me bring up the not the IYT, but the XLK. If I bring up the XLK first, let me grab that chart. Where is she? There it is. And then look at the difference between it and the RYT, right? RYT is equal weighted. It's Guggenheim equal weighting on the technology stocks. This is heavily weighted into the large cap stocks, just like the NDX 100 is. So here you actually had, right, the big V-shaped reversal straight up. And not only did it go straight up, it's taking you right back to the highs almost. Now switch over and look at the equal weighting one and look at the big difference between the two. It's not even close, right? But here, once I get it up, there we go. Here you have a little V-shape, but man, that's a weak one. And when you look at it on the weekly, right, this thing's just coming back in to do a retest regen. So if you're looking at breadth, advance on breadth, it's not there. And that's a concern. If there's a big concern out here, is you have no breadth in this move. That can be a real problem going forward once those that lead lag. In other words, they stop going up. And once they stop going up, if they stop going up, what we're going to see is we're going to see the others have to be rotated to. And if that doesn't happen, this market's not going to go that much higher. Positives on the fundamental side, you had the Canada rate cutting, you had China, doing multiple rate cuts to arrest that decline, you had Europe finding a bottom, you had the central bank playing it pretty much perfectly in Europe, and the governments coming to a conclusion, the EU itself coming to a conclusion that they can quote unquote bail out Greece one more time. And then those earnings we talked about already. On the negative side, Yellen has pretty much said she is going to raise rates more than likely in September. Now, it's very well telegraphed at this point, so given that, I don't think you're going to see a big move down in these markets on the first rate cut, unless it's more than 0.25%. I don't think that's going to surprise anybody at this point. It's been telegraphed for a year and a half. So that, to me, looks like it's going to happen, but it's probably not going to change much. The only thing that's going to change, if it changes anything, is going to be that we see some dollar pressure, right, which down the road is going to be an issue for earnings again. What should we expect and watch this week? If we're going to get a move higher, if we're going to get a breakout on the S&P, an extension of the range higher, you're going to have to see rotation in the small caps, you're going to have to see the chips stop going down, and you're going to see the regional banks actually get rotated too as well. Upcoming economics earnings is really about earnings this week. There's not much economics until the end of the week, so it's really earnings driven this week. What's the bottom line? In my thoughts, I think that large breakdown that was possible and did not take place led to the violent reversal, right? Because we extended the range to the downside, if you remember. Now you get the violent reversal. You're back at the top of the range on the S&P. You've broken out on the NASDAQ. At this point, there's a fairly decent possibility that we're going to get a range extension on the S&P, the broad S&P. Why is that? Well, we've been in the range for a while, right? It's 4 months now in this latest range that we're in, 4 or 5 months. The earnings have proved to be a catalyst to the upside, and the technology and financial sectors are the ones leading. That combination is a powerful combination and can certainly lead to an extension to the upside. If I look at the, what's the arguments against this? We don't have a strengthening, a broad strengthening in the sectors, and the small caps really haven't began to rally yet. If we're going to get that upside, these are going to change. And if you're believing that that's what's going to happen, right, then this might be a place to come look for some trades. And if I go and I talk about the breadth and I come down here, you can see a lot of sectors still weak across the board. So be aware that this is another narrow advance to the top side. If we look at the portfolio itself, it's a little bit underweighted. It's also a little bit underweighted even more so than it shows because we still have that short on here with the S&P. That short is either going to make or break probably the beginning of this week. We're either going to make some money on it, get out for even or something probably, or we're going to lose. One of the two. We're not going to change the stop. Gold. Gold has broken down. And if we look at gold, and just bear with me, let me go grab the gold chart. You know, what we see on this chart is a breakdown, right? Two more breaks on this short-term time frame, a break on the weekly time frame as well. So essentially we got multiple swing point breaks across multiple time frames. That's not a good combination if you're long. And that GLDI is long, and it's actually got it's about to pay a dividend. We certainly don't want to leave it. Probably want to stick in there for the dividend. So the way we'll probably trade this is we'll stick around to get the dividend on that trade and beef up the DGZ if we don't see an immediate bounce back up in there to do a retest regen and hold into those swing point lows that were broken. Elsewhere, PANW, this one doesn't report until I believe it's September. And given that, it's not a bad place to be. It was something that we tried to grab as it broke down. I'm trying to find it here in the list. Let me find it. Here we go. We tried to grab it down here on the breakdown, just missed it, right? Swings back up, makes new highs. Now the sector it's in isn't supporting the move. Well, it's not taking away from the move, but it's not bullish itself. And so here's a strong stock in an okay sector. Pulls back to this area, probably should buy it. If we look at the Apple, right? Apple makes the big run to the upside. Apple has earnings on Tuesday. We were fortunate in that we caught the big move in Apple off the lows. So we bought it down here in the 119 area that we talked about trying to buy. We got the V-shaped reversal. Now it's a full V at this point, back up to where it started. Now the question is can it extend farther? And it looks like it may be able to into earnings. So you got these two lows. It's right at that intersection, just slightly above them. I didn't quite draw that in right. It's just slightly above them here. If it can get a little bit higher tomorrow or Tuesday going into earnings, it can certainly test these two highs out here. I don't know if it get over them, but it can certainly test into them, and that would be the ideal place to sell some. Short of that, I probably, given that we got this nice buy, I think we should take some profits, so I'll be doing that probably tomorrow, the next day, if I can get my price. Again, I'm not pressured, or I don't feel pressured to take this off given what has happened on earnings so far with the big caps. EUO, HEDJ, HEWG, they're all set up the same. That is that they're all making their moves, and they're probably about done with the first leg of that move. I would expect some sort of a retrace off of this and then another push higher. So the ideal is, if we get a little bit more of a spike here before we get the pullback, let's take some profits. If it pulls back first, then let's just buy some, because I think we're going to get a farther run. And Starbucks reports Thursday, I believe, if I remember right. And I don't think that there's any reason to drop this. It's already extended to where it should. I suspect it's going to develop some sort of a range trade. We're going to want to buy towards the bottom of what we expect that range to look like. Well, that's it for today. I think I've covered everything. Oh, no, I wanted to cover one more thing, actually. The strong sectors in ETFs, weak sectors in ETFs. I've highlighted a couple here that I think are ready to potentially move. So if I look at the PPH, for example, so let me grab that chart. What I've done is I've highlighted things that look like they're about ready to really get a significant move higher. PPH is one of them. So this is the market vectors of pharmaceutical. Now you can see here that you don't have any volume in this thing, so it's not like you want to buy this particular ETF. But what you can do is you can step over, do a quick Google search, and I've done one here. And let me pull this up so you can see it. I've done one here. I just went in. I said, what are the, I searched on two keywords. That the ETF name and components, and it will give you the components that are in it. You can hit any of the links and go see it. In this particular case, you can see Johnson & Johnson, Pfizer, Glaxo, so forth, right? Then what you can do is you can walk over and look at the individual charts and see which of these look good. What we're doing here is we're saying, okay, going back to the trading cube, we got a strong sector, we got a market that's strong, I want to go pick stocks that are ready to move with those two combinations. And so here's the list of stocks. Let's go look at them. You can then take one of these, for example, the J&J. Let's just take it. Come over to the tools on the TA Today, right? Go to the sector trends and type in J&J, right? So if we come in here, we pop into here, we type in J&J, then that will bring up all the stocks that are in this group with J&J. And once we know that, right, it's in the XLV group. Once we know that, then we can come in here and sort this. I'm clicking on, short-term trend, and I'm pulling up all of those that are bullish, and I can see what they are. Once I do that, I can click on one of those, and I can go look at the charts associated with that stock. So I just clicked on BM, or I didn't click on it. Let me click on it. So just a second, let me grab it again. So if I click on BMY, that's going to pop up that chart on all 3 time frames. Now here you had a big spike down. I don't know what this was. I'd probably go look at that to see what it was. But if I pull over my trading cube, I can see the sector strong, right? Fairly young. Market strong, fairly young on the short-term time frames, right? This one's a little extended on the longer-term time frames. We know that, but it's got a little bit farther to go, so we could get another 2, 3, 4, or 5 weeks out of it probably. And we can see here, it's just this particular stock is just starting to make its move. That's not a bad combination. And so I can go find stocks like that and decide, which ones look the best. Look at Eli Lilly. Let's see what this one looks like. Okay, this one actually looks even better. You had a big volume push. You come back. Now you're testing into the top of it. That looks like a pretty good situation. I did go look at earnings. I'd see what they look like. This may be a stock to try to play on an earnings move, given that we expect earnings in general here to move higher. Okay, hopefully that helps. I think that's a good way to attack this thing and to make some hay in these 2 particular sectors that look like they're ready to just spike again. All right, hope that helps, and I will leave it at that. If there's anything I can do to help you, drop me an email. I'm always here. I don't get to them immediately, but I get to them as quick as possible. As the subscriber base grows, it gets harder and harder to get to everybody. But if you need something, holler, and I'll try to do my best to help. Take care. Have a great one. I'll see you next time. Good night.